Welcome to the DeFi Standard. This is Patty XRP, and with me today I have
Mickey B. Fresh.
very nice. And we are going to get into some further conversation around liquidity pools, especially in relation to Flare Finance's platform, FlareX, which will be the decentralized exchange on the Flare Finance ecosystem. And we're also to build on top of the last video we did about this, we have brought into the fold a fee schedule that will allow us to compare what are impermanent losses at a given point in time with the possible amounts of fees earned as well during that time, so we can see if we are ultimately profitable by inserting our assets into a liquidity pool rather than just holding them. So Mickey, I'll turn it over to you for some opening thoughts.
Yeah. So, one thing to know about liquidity pools compared to regular exchange trading, it gives everybody the ability to participate as a market maker. So, this levels the playing field, and you just don't have these big market makers now. It allows everyone to provide liquidity and also trade on the backside. So, you could be using it on both sides. So, you could be earning fees on one side, paying fees on the other side. And then you have multiple different pools based on the pairing that you need to swap between them, and you can provide liquidity to different pools. So it opens up the whole retail to participate in providing liquidity, which gives deeper liquidity based on how much you put in. So I think it's just a development that this is a whole new concept of market making. And we're starting to see it really roll out here and see how you could profit in there. And Patty's going to go through that today. And this is not financial advice or tax advice. This is for just educational purposes only.
Absolutely. And yeah, all the numbers we're going to use in the examples here are going to be theoretical scenarios. For me, when I'm looking at if I want to enter into a liquidity pool, I'm going to look at a whole range of scenarios and then think about what is the most likely outcomes. And then also take into account, if the position moves against me like really harshly, is that something I'm willing to handle and accept? So I think that's really important when you're making decisions on the different products in DeFi. Do what makes you feel comfortable, but give yourself an opportunity to learn about the things that may seem a little more complicated or risky, because there may be ways for you to use them that reduces the risk, and that's something we'll get into further down the line. Just not for today's video. But moving over here to our spreadsheet, you guys will kind of remember this page from the last video. So we're going to start off here with a 2 token pool, since that's what they will have on FlareX. And these are 50-50 pools. So that means the value of the first token must be equal to the value of the second token. And that value is achieved by multiplying the quantity of the token in the pool times the current price. So to make this easy, we're going to start with FXRP and YUSD, and they're both going to be equal to $1 at the time we enter into our pool. So our user has $20,000 worth of value with 10,000 FXRP and 10,000 YUSD in the pool. Now, we will say that at some later date, which we'll define here in a sec, the FXRP price will now be $2 compared to the stablecoin price of YUSD, which stays at $1. So this is a 100% move upwards for FXRP and nothing to scoff at when our pool rebalances. And these are just formulas that are used in Uniswap to calculate where the pool needs to rebalance to, which the rebalancing is conducted by arbitrageurs who are taking different prices between a DEX and then some kind of centralized exchange, and then swapping the assets until the pool is back to 50-50. This is happening at a very high speed with people that have bots and algorithms that are just finding opportunities, every second of the day and taking advantage of those. It'll be something that's probably rather difficult to do manually. But we can see at this time in the future, when the FXRP price has moved up, that our pool has rebalanced to only have 7,071 FXRP and then now 14,142 YUSD. This would bring our value to roughly $28,000 between those two assets. So we can see that we started with $20,000 and the end value is now $28,000, and that's just from the price appreciation. However, if we had held our assets rather than putting them in the liquidity pool, we would have 10,000 FXRP still and 10,000 YUSD still, which would equate to $30,000 in value. So you can see even with a 200% or sorry, a 100% move, so a doubling in the price, that our impermanent loss is relatively low. You only missed out on about 5 to 6% of additional gains. Now, this is not taking into account the fees, which we will move over to our next tab that is going to do that for us. So here we can see on the left side, similar setup to the last page. However, this is going to be our total pool size over here rather than just our user value that's staked in the pool. We are going to say that the pool size is $1 million. So that would be 500,000 FXRP tokens and 500,000 YUSD stablecoins in the pool at the entrance time. Now we can move down. You can see here how the pool rebalances much larger numbers, but that's because, $1 million for the entire pool. And still the same impermanent loss, even though the values increase. It just means that the value like lost because of impermanent loss would be higher, but it's still the same percentage. So moving over here, we are going to take a look at our fee schedule that we've created out. And the way that this is going to work, we're going to have 24-hour volume percentage. So this is going to be the percentage of the total value in the pool that is the daily volume. So that's about $500,000 worth, which is representing how many, trades are happening within that 24-hour period. And then additionally, we're going to have our fee rate for every transaction that happens on one of these FlareX liquidity pools is set at 0.3%. Now, only 90% of that 0.3% paid in fees is going to the liquidity providers. The other 10% is split up between the APY cloud, which is rebranded as Kakibo now, and then the other percentage of that is going to the Flare Finance team and their investors. So ultimately, the liquidity pool providers will be getting 0.27% off of every trade. And then we're going to have our number of days that it takes for the FXRP price to go to $2 is going to be 365, so an entire year. And then also we will have our daily liquidity pool growth be set at 0.5%. So what this means is new people on a daily basis coming into the pool and providing additional liquidity on top of what has already been put in there. Another thing that is important to note is that when you get paid fees on a daily basis, they don't actually go to your wallet. They get reinvested into the liquidity pool, which could increase your stake relative to the rest of the pool if the pool's declining in size. However, it will help you keep up with some of this daily LP growth in regards to your stake in the pool. So going down farther, if we have 365 days of earning liquidity pool fees with our $20,000 worth of value, and then we will move back over here to our first page, and you can see that we are able over the course of 365 days to earn $12,725.35 in fees for a liquidity pool that was doing around $500,000 in daily volume, with us staking $20,000 to start in that liquidity pool. Like I said earlier, these are theoretical numbers to give you guys examples on how this works. It's definitely going to be a lot more variable than this, but it's an Excel spreadsheet, not some super advanced computer model. And going down here, we can see if we profited off this action. So if we had just held our tokens, they would be worth $30,000 now. However, the value of staking our tokens ended up being $41,000 and $41,009.62. And that equates to around $11,000 profit, which we would have made over just holding our tokens. So we can see that we did have some impermanent loss, but the fees were enough to counteract that and actually give us a pretty solid profit. We made 25, or what would that be? About 33% more than we would have made if we just held our tokens. And then additionally, we started with $20,000 in value and ended with $28,000, not including the fees. So you can see you get some price appreciation, even with the impermanent loss aspect. Now, let's do a scenario that's not going to be as great for us. So we'll say that the XRP price, goes up 100%, but instead of over the course of 365 days, let's say it's in a quarter of the year, so 90 days, and keeping all our other variables the same, you can see that we would have only earned almost $2,600 in fees, which barely makes us profitable on that. But you can see how the more time spent in the liquidity pool, the more likely that you could overcome any impermanent loss. And just another reminder on impermanent loss that's really important is that impermanent loss is not permanent until you exit the pool. So this number, this price ratio could go wherever you want it. But if it comes back down, there we go. If it goes to $5, it's like, okay, well, we have 25% in impermanent loss, but let's say that's where it peaks and then it falls back down to 150. Oh, spreadsheet's a little slow, but then you could see that our impermanent loss is really minimal. And for all that to happen, we had to spend more time in the liquidity pool, which means we were getting more fees in addition to it the entire time. So, Mickey, I'm going to turn it over to you here with some thoughts just on these examples and in general with the liquidity pools.
Sure. So this is a great example to earn passive income. So regardless of where the market is going, up, down, sideways, you're able to earn a steady stream of income. Granted, you can't pull those fees out until you pull out of the liquidity pool in total. So you'll build those up and it will keep putting the fees back in to what you're providing to the liquidity pool. So it gives you um, more value into the liquidity pool to earn more fees. Now, I just do want to throw on top of this of what Patty's saying. He's just talking about the fees here, because on top of this, you get an LP token, which then you could stake in the Flare Farm pool. And we're not going to go too much into that, but that's how you earn YFIN. Now, that would be taking place simultaneously on top of earning all these fees. And now, if you are using, say, FXRP in here, you would also be earning your daily Spark allotment as well on top of this. So it's a way to generate steady stream of income regardless of what the market is doing. And this is one of those things we have to look beyond just moon, because just mooning is not always going to happen. And we could see over the last 3 to 4 years or so, there hasn't been any mooning going on. So you could just be steadily earning fees throughout this. And you don't have to take your whole portfolio. You could just take a small portion of your portfolio and enter into these liquidity pools, but it's a way to generate passive income.
Yep, absolutely, Mickey. So, I mean, just by using either FX, really any F asset or Spark in one of these liquidity pools, you're going to have the ability to earn up to 3 different yield streams. So, that'll be either from the F asset rewards, your daily Spark there, from delegating your Spark vote to the FTSO, getting daily Spark that way. And then on top of whichever, asset you're using there, you get YFIN from the Flare farm, and also you get the fees on a daily basis. So that's a lot of incentives, and we haven't even added in earning YFIN, which we will do in the future and cover some more just to really show you how powerful the yield can be with the liquidity pools early on. But it's just a massive opportunity that won't always be around, because YFIN is going to be distributed over the course of 2 years with 50% of the total amount being distributed in the first 6 months. So very similar to how the most Sparks going to be delivered to people for minting F assets or delegating their FTSO vote. Also, people that participate in liquidity pools to get access to Flare Farm, they are going to get the most amount of YFIN delivered in the first 6 months. So I think that's something really important to note. And Mickey, I'll add on here, with our example on the liquidity pool size, we're only showing $1 million here, but what was it? Uniswap got over to like 2 billion one
Billions.
time and yeah,
Hmm.
24-hour volume. So you can only imagine if let's say the market's tanking, but you're, nice and cozy in a liquidity pool and there's an excess of trades going on, that you're going to earn a lot of fees during a short period of time versus when like there's not a lot going on. So
Yeah,
go ahead.
it's a nice way to hedge yourself. So if you're looking for capital appreciation here, you could also hedge yourself and just make these continuing yield streams bringing in. And for example, certain pools are going to have higher volume than others. So we think, for example, FXRP to YUSD is probably going to be one of the higher volume pools there. And then eventually new pools will pop up, like we were talking earlier, Patty and I, that it's possible we see FXRP to Spark pool in the future. So not everything will be to YUSD. That's just what Flare team is starting with to make it easier for everything to be calculated. But in the future, we'll see FXRP probably to Spark as a big one, and you could provide both of those. And just more as more volume gets ramped up, and as the ecosystem of the DeFi gets bigger and bigger on Flare, more volume is going to get put through it, and there will be arbitrage opportunities for other market makers to balance this out. So there's almost an unlimited amount of liquidity in these pools.
Yeah,
Technically, it's
technically,
unlimited.
yeah.
It's just some slippage that could take place if big orders went through. But that's why, as more people, they're incentivizing you in 3 different yield streams to provide liquidity. So having that YFIN that you earn, and we'll go into this in a later video, but I just do want to let everyone know that once you earn that YFIN from the Flare farm, then you put it in the governance staking pool to earn a guaranteed yield of 5 to 35%.
Also, on top of that, they actually have a liquidity pool for YFIN to YUSD, and you'll be able to earn additional YFIN from the Flare farm if you want to participate in that as well.
Mm.
So I think there's just a lot of opportunities there with YFIN to earn in many different ways. Um, but I guess the last point I'll throw out is the fact that the best times to enter these pools is generally at the tops of markets, around the general top, and then also if the market's going to trade sideways for a while, because when you enter in at the top, you could just stay in the liquidity pool even if your value is decreasing in it, and then wait for the market to rebound back to that level and basically exit with very little impermanent loss while the entire time you were collecting fees. And then on the other end, if you're doing it in a sideways market, well, the prices aren't kind of diverging from each other that much. So that means your permanent loss is going to be minimized as well. So the other thing I guess I would add, Mickey, with like FXRP to Spark, I imagine with Spark having to be locked up or not locked up anymore with the price of FXRP going up and down, that they're going to be relatively correlated. So when you have assets that are correlated, they generally move together around like, the same percentage gain or loss, which means that the impermanent loss is minimized. When you're moving with the dollar, every move up or down is going to increase or decrease your impermanent loss. So I think that's an important thing to note. But Mickey, do you have anything else before we wrap it up?
Yeah, no, that is important. I think just hitting the nail on the head there, FXRP and Spark will probably be correlated with each other. That's we're speculating on that, but I think it's easy to see how they could be correlated. So, and I think that's big for the F asset system too. So as FXRP goes up in price, Spark's probably going to follow along with it and correlated. It's most likely they're not going to be uncorrelated. It's more likely they will be correlated. And then other pools too. We'll have to see how they develop. But at the start, there's just going to be YUSD pools to each of these assets at the start. And also Flare Finance is going to have liquidity events or liquidity rush in the beginning for many of these liquidity pools that will have boosted rewards. So on top of what Patty's saying here, there might be higher fees put in or other incentives added on in the beginning that will incentivize people to provide liquidity in these liquidity pools. So stay tuned for that. That's yet to be determined from the Flare Finance team.
Awesome. Well, I think that wraps this video up. I just want to let everybody know all these spreadsheets that we ever use in videos are available through our Patreon, which is under Mickey B. Fresh. So feel free to check that out if you're interested. But otherwise, this is the DeFi standard. And I'm Patty XRP. And with
And
me
I'm
was
Mickey B. Fresh.
nice. We'll see y'all. We're out.